So today the Bitcoin price is $20,530, which it feels like every video that I do, it's in that region. So we have a lot to get into today. I was very surprised when I logged onto Twitter this morning and I saw how bearish the whole sentiment is. So I'm going to go through a couple of Twitter threads very quickly before we do get started with everything on the price. Let's have a look. Well, firstly, you have Bitcoin logarithmic growth curve on the 2-week chart, and you can see that we are still out from the lower band over there, which in relation to back here in 2015, we had a couple of 2-week candles there, as well as in the March COVID dump as well. So it's looking very, very similar. What we want to see, of course, is a snap back into this area. But as the tile suggests today, I'm sure many of you are wondering, why is Kyle flipping bullish and suggesting that you close your short positions? Well, not financial advice, but I don't suggest that you close your short positions. I'll just say maybe tighten your stop losses and understand that there is a possibility of that mean reversion bounce happening very, very soon. And I'll show you towards the end exactly what I'm looking at, as well as the exact levels that I'm following too. This is a follow on for those of you who watched on Saturday. We got the exact pullback that we were looking for, which is fantastic. So first and foremost, let's go into what I mentioned on my Twitter over here. You can see that it says this is huge. I don't know how this will end. Henan Bank is not the only one that is having problems with liquidity. All 4 Chinese banks are having the same issues. Some depositors found that they can save and cannot withdraw money with their bank card. So there is actually quite a lot of pandemonium within China. You can see they've been protesting. There's another one over here. Guys are panicking, storming the banks, throwing water bottles at them. It's crazy out there, guys. So is this going to be a contagion that's going to lead into some sort of a black swan event within the crypto markets and crash the whole thing? Well, I don't know. That's why we have to trade carefully. We have to control our risk. We have to be expert risk managers. And to do that, we need to know our exact position size that we're entering with. We need to know when we're entering. And the most important thing is we need to know where are we wrong and where do we exit the markets in case of being wrong. And that's what I will cover shortly. You have here also with Alf, he says, never since 2004 have people in the US searched both recession and inflation on Google at the same time this much. So you can see it's really, really all doom out there. We have Celsius, which continues to send its remaining crypto assets to exchanges. A few hours ago, 2,000 BTC were transferred from their main wallet, and after a series of hops, eventually hit Coinbase and Binance. Remaining key assets, so they have 479 million. And then they have 342 million in BTC versus ETH. So a little bit more ETH, but that is a lot of crypto assets that have been sent to exchanges. And why are they sending it there? They're sending it there to leverage trade on BYBIT. No, I'm pretty sure they're sending it there to sell. And that's why I recommend keep your eye on the whale alert. You can follow that on Twitter. Have a look at what whale alert is saying if you start to see massive inflows. And again, you don't just blindly trade this stuff, although there are some people that do that. But I recommend have a look at what Bitcoin price is doing if it's sitting at a key area of support. And then if these whale alerts start to go ballistic and it breaks through that support area, then you can say, okay, this could be real. This contagion could be spreading, and maybe it's time to stop out and get out of all positions. So we'll be monitoring that carefully on Twitter. But you know, with the greatest opportunity is oftentimes when those risks are very, very high, intentions high, sentiment is bad. And that is when you get those good risk to reward trades. So here, Holger says, global markets have started off in a risk-off mode with the week on recession fears, with risk of more COVID curbs in China, exacerbated worries about global economic outlook. Most of the Asian stocks have dropped, along with the US and European equity futures. The dollar gains with the yen hits the 24-year low, and then Bitcoin is at 20.4K. So what I would say to this is if Bitcoin does manage to hold those higher lows, which I'm going to show you shortly, and it can do that whilst all of this goes on, then maybe things are flipping bullish. Maybe there is a real opportunity for bulls here. And again, I just want to make it very, very clear there's a difference between short-term, mid-term, and long-term. Long-term, I still think things are quite bearish. This is simply a short-term opportunity, which could play out over, I would say, anywhere between a couple of days to possibly even a few weeks into August. So having a look here at TED Talks Macro, he says that expecting this to be a volatile week across traditional finance and crypto after Friday's strong employment data. Risk off, again, he's agreeing with the other guys, risk off should be the theme. The US CPI is due on Wednesday, and that could further suppress risk appetite given that inflation is expected to have accelerated again in June. So have a look on Wednesday and Thursday is usually when these major market moves essentially take place. But at the end of the day, I'm not really a fundamentals guy. I understand that fundamentals can tie in nicely with technicals, and I'm primarily looking at technicals. So let's get straight into those technicals. By the way, if you do like this video, please make sure that you click on the link in the description below over there and give us a like, share this with a friend if you have any friends that are not viewers of the show yet and you get value out of this. Also follow me on Twitter. I'll keep you up to date with everything there. And then if you are looking to take this next trade with me, which I'm going to show shortly, and you don't have a BYBIT link yet, please click in the link below. That will take you to the BYBIT page and you can sign up over there. That is the only way that you can pretty much support me, so you lose nothing and I gain a tiny little bit off of the trading fees. Okay, let's get straight into the alpha. So Bitcoin on a monthly chart over here. Now we've outlined the important areas to look at, and this is why there's a lot of confluence. I love confluence. I love confluence when trading. You want to see everything line up really nicely. You have the RSI that on the monthly has never been this low. But of course, that means it can go lower, right? We need to see how the month closes. So far, it's attempting to tick back up. And you wait for confirmation, you wait for that to tick back up and reclaim this area at 44.39. So that's one thing that I'm watching. I have marked out the important monthly areas over here, which would have been the previous month close. So I'm hoping that we stick within this range over here. So any sort of trades that I'll be taking will be in attempt to play this massive range. I could probably mark out the mid-range as well. Let's quickly do that now while we're at it. So just grab that. I'm going to mark that off with the horizontal. Let's go with the horizontal line. Okay, and then lock that in. So that's your mid-range. Now, I'm expecting any sort of mean reversion play to happen within this range. So essentially, as long as we can hold the monthly close, which is coming in at 19,924, we need to hold this level over here. If we can hold this level over here, you can target the tops or the mid-range, which is coming in at about 25,800. Now, that's where I would be looking to go long. I would be looking to long into that zone over there, probably take profit in that zone because there is a lot of confluence on the other time frames as well coming in that area. If we clear above that and hold, then cool, we can start to target much higher and maybe the whole picture is changing. But for now, this is simply a mean reversion trade on the monthly. Let's move on to a weekly chart for more confluence that you can see over here. Okay, so weekly chart. We took out the previous week, it wicked above. You can see this is still a choppy area over here. What you can do is you can open your chart over here and you can also mark out the range areas that we're going to be working within over the course of this week. What I like to do is I always take the previous week's areas, which would be the wick high over there. So you can mark that out. I'm going to use the dotted line just so that we don't get confused between the weekly and the monthly. So that's one. Let's mark off this area over here. Two, can go there onto the open and then the wick low. So this is the primary area that we're in at the moment. As long as this week doesn't take out the previous week's close. I think that things are still okay, and it has a chance to bounce off of the monthly close, which is coming in again at 19,924. And we're going to work our way down into the low time frame so that you can kind of pinpoint exactly what my line of thinking is and what I am watching. So we got this area over here. Again, I want to hold above that 255 MA. I want that MA to continue to be angled upwards. It's coming in at about 19,572. So watching that carefully. The DXY, just to quickly touch on this, I did mention on Saturday at least that if there was going to be a pullback, I'd be looking to target into the yellow zone. For now, I'm still going to leave this over here. But as you can see, obviously the whole China thing was unforeseen over the weekend. And I think that is probably one of the reasons why the DXY is continuing to rally. But your primary zone is going to be a little bit higher up, which is 108.6 over there. So it's about another % higher. Quickly having a look at the stock market. Let's see what that's doing. Okay, stock market is still pushing up. We'll see how it opens today. It's only going to be later in a couple of hours' time. So let's take a look if futures is open already. Okay, futures is open to the downside, so possibly another lower high. So again, risk is still to the downside in the long run. Okay, Bitcoin over here on a 3-day chart. Wait, I wanted to point out to you this ETH chart. Let me just find it here quickly. 1 second. Okay, it's on this one over here. So I wanted to point this out to you for altcoins, for the purpose of altcoins. And this is ETH BTC. So if you are, I'm personally only looking to go long at the moment on Bitcoin. And the reason why is just to reduce my risk. There is a possibility that altcoins could still suffer more, and to find the possible bottom of altcoins, you can use multiple different factors. One would be, of course, the Bitcoin dominance, which we know is going up. I'll come back to this chart in a second. Let me just quickly show you what the Bitcoin dominance is doing. So having a look over here, Bitcoin dominance is attempting to reclaim the mid-range. I did give this on Saturday, which if you look at the watermark in the background over there, if you type that in on your trading view, this will give you the Bitcoin dominance, excluding the stable coins, which we know is forming a bigger part of the market. So I call this the true Bitcoin dominance. The true Bitcoin dominance is going up at the moment. It's at about 51%. It's about to reclaim the range high. And once it starts to hold this level, I'd anticipate it's just going to continue on upwards. So you tie that in with the Ethereum Bitcoin chart over here, and you ask yourself, well, hey, when Bitcoin dominance looks like it's starting to top out and the Ethereum BTC has come into the key area, which at the moment is in this zone over here. So it matches up with the liquidity area and the trend line over there. And that, if as a percentage, is going to be anywhere from about 20% all the way down to about 35% more downside for altcoins against their Bitcoin pairing. So it's very difficult in the markets for you to now attempt to try and pick the best altcoin, right? It's like picking a needle in a haystack. How do you know that you're going to choose one that's going to outperform Bitcoin? So I find it better wait for this to turn back up beforehand. So you're looking at something like this. If you see this come into this zone over here, great. Now, once that happens, you can start looking in this region for strong altcoins that have strong relative strength, and then start targeting further upside. So I'm going to move on to Bitcoin over here just to get closer to what I'm looking at the moment. And we have, look, again, risk is still to the downside, but it's still worth an attempted long. And the reason why risk is to the downside is we have the top of the range. We deviated, we rejected. We didn't even make it to the main moving average, which I look at over there, which is the 34 EMA on the daily chart. You really want, and I keep saying this, I don't want to repeat myself too much, but you really want to reclaim that moving average, and you want this moving average or this EMA to start to turn back up like that whilst price has recaptured it. That would be a very good sign. That's a signal that we could probably expect much higher prices, probably into the 30K region. So for now, this long that I'm attempting to take is risky, which is why you have to control your position size. So and I'm looking to long into this area over here. If you look on a daily, you have a series of higher lows, and I'm going to show you it much better on the 4-hour chart, but you got 1, you got 2, and we're looking for the third one over here. As long as price can hold above that area over there to create the next series of higher lows, you have a new trend being established, and I'm willing to back that trend for potential upside move. So let's look at it on this chart over here, because this is the primary chart that we are working with. Again, I want to re-emphasize to you guys that, remember, price is currently caught below all 3 of the EMAs that are important, and it is still a downtrend. However, it's attempting to change into a new trend, and you need 3 touch points to create a new trend. And from my experience, it is worth taking along on the 3rd higher low, especially if you already have 3 higher highs, which is exactly what we have here. So just to make it very clear, we have 1, we have another one, 2nd higher high, which is marginally higher, and you have the 3rd higher high over here. You have a trend line which is working beautifully over there, and that's where I'm looking to catch the long. So the higher lows are very clear. There's no disputing that. These are perfect higher lows, and you have the trend line. But there is another way that a lot of people will be looking at this chart, because I've mentioned before, let's just make this a bit bigger. Markets typically operate in 2 different ways. They're either ranging or they're trending. They range for about 70% of the time, and they trend for about 30% of the time. We have not yet established a new trend, but we are on the cusp of doing that. It's very, very close. So if you're looking at this as a range trader, which I'm sure a lot of people are, then what you have over here is you have your range high, which I've outlined at 21,767. You have your range low coming in at 18,000, and it is pretty much just ping pong. Top of the range, sell. Buy the bottom of the range, sell the top. Buy the bottom, sell the top. Buy the bottom, sell the top. So what I'm saying is that there is a potential that this could come all the way down, and that's why we need to control our risk. The dash line over here is your mid-range. Range traders, typically what they would do is, let's say they short sold at the top over here. They'll take their first TP on the mid-range, and they'll target the last TP at the range low before they take profit. So what you have over here is you need to decide, and you need to ask yourself, are you going to attempt to take this as a range trader, or are you going to attempt to play this as a new trend? Well, the beauty is that there's a lot of confluence in this level, and you could potentially do both simultaneously. And the reason why I say that is because you have this level coming in over here, and I drew these lines on Saturday. You can see that it's playing out almost exactly. I'm just going to delete that over there. And I mentioned to you that I'd be looking to buy with anywhere within this region over here, within the circle. You have to have an invalidation point, right? Your stochastic RSI is attempting to cross back up, which gives me some sort of confidence in attempting to buy this dip over here. So I'm looking, I haven't entered. I did mention that maybe I would enter the first part over here, but I kind of wanted to have a look at the market when I woke up on Monday. And having had a look at the market, I'm actually quite glad to see that we have this news on China and the futures markets, and everything looks pretty bleak in traditional markets, which might give us this next leg down. So controlling your risk, we can see that coming down onto that trend line, we would need about another 4.6% move for Bitcoin before that level gets hit. This would be the ultimate sweet spot, especially if it's a wick that comes through here. And the reason why is because, of course, you have your mid-range, which is coming in at 19,800. And then you have the trend line, which has been governing the higher lows, which is coming in just below that at about 19,500. So in my personal opinion, and again, this is not financial advice, if you can catch along anywhere within this area over here, I think that is a great risk to reward ratio, and your risk can be cut as low as 18,875. If you start to break below this region over here, especially if you see any candle closes underneath that, then we say, well, we're wrong. We're wrong on this whole move over here, and you can expect that price is going to break down, target the range low, might break over there, and then like Al Capo said, then we target straight back down to the mid $15,000 region. So the risk to reward remains good. I'm definitely going to take a long as soon as it hits there. I have no emotion involved whatsoever. Now, how do you enter into this position? Do you go all in, right? You've been sitting in cash. You've been waiting a long time. You're ready to buy the dip. What next? Well, I definitely don't recommend that you go all in. You need to calculate your position size. And how do you calculate your position size? Well, you say to yourself, hey, okay, if I'm entering my positions over here, so let's say we're going to enter one on the dash line over there, and we're going to enter the next one on that line. I'll make these bigger for you, by the way. They are small. I understand that you can't see that. Let me just grab another one. And we're going to enter the last one very close to the exit point. So you need to ask yourself, hey, my overall portfolio, let's say it's $10,000, $100,000, whatever it may be, I'm willing to risk 3% on this particular trade, 2 to 3% on this particular trade. That means that if you are entering on average from this level and price moves against you, you should only be able to lose 3%. So if it goes against you and you stop out, you shouldn't lose more than 3% of that portfolio. That is how you determine your position size. So the way that I would do it is either I would take a smaller amount to have less exposure and I'd put that on an exchange, which that's personally the way that I've done it, especially with everything going on. There's kind of like this liquidity crisis, run on the banks, run on exchanges. Then basically you have to worry, well, if everybody simultaneously tried to withdraw their money, will they be able to get that money out on time? And that is the reason that you actually use leverage. So instead, I would rather put 1/3 of my money in at this level over here with a 3x leverage, right? That means if price goes against me, yes, I lose 9%, but that 9% is actually only 3% of my overall money that I initially had planned on entering. And let me know in the comments if that makes sense, because I think for a lot of you, especially if you're new, that might be extremely confusing. So let me know in the comments. I'm going to go after the show and have a look. If it is confusing, I'll write a thread kind of explaining exactly how that works. So guys, in a nutshell, that's basically what I'm looking at. You can choose whether you want to go into alts. That's up to you. Certain alts are in an uptrend. What I found interesting was that on the short-term time frame, Ethereum is actually forming also a bit of an ascending triangle. And by the way, these ascending triangles do have measured moves, right? So I'm actually going to work out the measured move for you right now, what you can expect, where your TP would be if you were to take this trade. So what you do is you take range low, range high, and your measured move, let's say we break out over here, it's going to come to 25K. Now, what's interesting is if I zoom out over here, you can see 25K is also where that previous wick was. So, and this was one of the areas of interest that I had. So basically, if you play this move and it does go to the upside, you kind of want to take your profits in that region. It does also match up with all the previous lower highs that we've had all the way from about 48K. You've got this trend line that's coming down. So this is a very short-term play. Once that happens, I would immediately aim at taking profit. Well, reassess the situation, right? Maybe things are switching bullish overall, equity markets start making higher highs. I don't know what's going to happen. And anybody that tells you that they do know are lying. They don't know. None of us know. We have to take each day and each week as it comes, and we take it from a probabilistic standpoint. So if we break back up towards this level over here, which is around the 25K, I'll be tightening my stops and considering to flip short. So we hit this area over here, close this long position, which is going to be a beautiful long, by the way. If you have a look at this, let's grab the ruler quickly, just remove all of that. I don't want to make the charts too messy. Give me a second. There we go. Okay, let's grab the ruler. So you're looking to go long on average from here. On Bitcoin alone, that is a 30% move. Now, tell me who wouldn't enjoy a 30% profit over a couple of weeks, right? This is what you call swing trading. So low risk and very decent reward. Your risk is right now we have a 3% move to the downside and we're looking at a 30% to the upside. James, can you see that on the top of the screen? It's not coming on. Is it just on this screen? Sorry, guys, I had a random pop-up on the TV over here on the second screen, but I don't think it's coming up for you guys, which is good. Okay, so that's that one. Looking at Ethereum over here, very similar picture, but remember I did mention that this one has not made a higher high yet. It has, whereas Bitcoin has made a series of slightly higher highs. Certain altcoins have not. I'm just going to go straight to the one that I do think was quite strong, and that was, when I looked on the weekend, was UniSwap. So you can see how overextended the stochastic RSI is starting to become. If you start to see that flip up and Bitcoin bounces off of that diagonal trend line, which I've outlined in the key areas. By the way, I will go back. I saw in the comments, I will go back and make those price targets bigger for you. But if you are going to long on any sort of altcoin, this one looks much stronger than the rest. It's the only one out of the whole 20 that I looked at for you guys on a previous show is UniSwap. Have a look at UniSwap. It looks better than pretty much the rest of them. Okay, but let's quickly go back. I want to make that big for you on the prices. Let's zoom in, and then you can take a screenshot. I will also put this in the Daily Candle newsletter as well as on Twitter. So let's make that big. I'm going to put on 14. James, can you see that clearly?
Make it even bigger, right?
How's that?
Yeah, it's clear.
Okay, so there's your kind of areas that you're looking at. Your invalidation is any closes under 18,875. Basically, then we're wrong. And no one knows where things are going to go, right? You have to have an invalidation. You always have to have an invalidation. Let's quickly have a look at what the stochastic RSI is doing on the different time frames. You can see, of course, the 4-hour, which is where my edge is. I trade the 4-hour best as a swing trader. That's where my edge lies. On the other time frames, you can see the daily is coming down, but that can easily flip back up. 12 hours still coming down. 8 hours starting to turn back up over there. 4 hour, like I just said, is turning back up. Let's look at the 2 hour. 2 hours on its way back up. 1 hour is on its way back up, which brings me to the next point, which is, well, what happens if this thing starts rallying before? Then what? Then what do? We have to have a plan for that too, right? If this doesn't make it into our zone and it starts breaking out even before that, well, we need to have a plan for that as well. And what would that look like? Well, for me personally, I'm having a look at the 1 hour chart over here. I have the Bollinger Bands on, not really necessarily relevant for right now, so I can take that off. But I'm essentially just tracking this trend line over here, right? And this is just a momentum trend line. I'll make it a lot bigger. And you can do the same thing on your charts. You go put this on a 1 hour. Let's make that about 3 points over there. So maybe this starts reversing sooner, and then we kind of need to like front run our idea before it gets to those lower targets. And how would that look? Well, you need to mark out essentially you got your series of lower highs on the 1 hour chart and lower lows. So you got lower high, lower low, lower high, lower low, and so forth. So the level, if this were to happen live right now, what I'm watching is for something like this. Price pushes through, breaks the momentum line. That means things are going to slow down and something is changing, right? Doesn't necessarily mean, though, that all of a sudden it's just going to flip straight away bullish. Like what could happen is, well, we need to see this level get cleared. So what could happen is it could slow down, go sideways a bit, and then still go down much further. But if it breaks this trend line over here, I'll start to pay attention that maybe I need to consider front-running the idea. Front-running the idea should happen right now would look something like this. Break through that trend line, momentum slows down, kind of retest this area, form the next higher low, so one low, second higher low, and then break through over here. You've now made officially your next higher high. I won't just ape in all of a sudden. Wait for it to retest the third higher low, go long, basically. that's kind of the way that I'm looking at it. I will keep you up to date on my Twitter though, which is why I really encourage you, if you're not already following me, then please have a look again in the link in the description below. Give the video a like. I see there's 685 now since I like my own video. Have a look over there in the description below. Give it a like, give it a share, hit the bell notification, follow me on Twitter. Make sure you got the right one. If you just click on that link, it will take you directly to my Twitter account where I will post and keep you up to date. I think that is pretty much it from me. Make sure that you also use the BYBIT link below if you're not already joined on BYBIT. Support me over there by following along with my trades. And then you have the link to the daily candle newsletter. If you do click on that, it will take you through to okay, this is the good morning one. What you can do is you can go onto Sheldon's page if you're not already signed up, and you'll see there the daily candle. Click on that, subscribe. You'll receive Monday to Friday about 5 to 6 different charts. Half of them are mine, the other half are Sheldon's, and that's, you can see what our thinking is within the market for that particular week. And guys, I think pretty much that is it from me. Please do make sure that you comment below again to let me know if what I said and mentioned about the controlling your risk by using leverage on exchanges versus having a massive spot position, if that makes sense to you. Let me know in the description if it doesn't, and then I'll try and elaborate on that on Twitter for you. I will have a second show later, so make sure you tune in for that. Again, keep an eye out on my Twitter. I'll post about that and let you know when I go live. It's probably going to be only later on this afternoon or this evening, in a couple of hours time, and then maybe we've got our buy orders in at that point. So that's it from me, guys. Have an absolutely stellar day. Good luck with the trading, and thanks so much for your time. I'll see you guys all on the next one, and cheers for now.